Are you thinking about buying or refinancing and wondering what happened to interest rates this week? Or are you just trying to figure out if buying is cheaper than renting? Well, this mortgage report is for you. Hey everyone, I'm Bob Johnson. I'm the Senior Mortgage Advisor for our industry's oldest privately held mortgage banker, Wallach & Volk. We have been in mortgage lending since 1932. And no, I know what you're thinking. I didn't do the first loan. I have been blessed, however, to have provided financing to over 25,000 families in my 20 years in the business. All right, let's jump right in to this week's mortgage report. The question of the week: what happened to interest rates? Well, they ended up the week at the highest level since the middle of June. The bond market stayed in negative territory all week, and that negative pressure came from all the positive action we saw in the stock market. We had a major merger announcement, the Time Warner and AT&T deal, and the market loves M&A activity. It believes where there is one, there is many. And that positive movement stole money from bonds, which caused an uptick in interest rates. There's also increasing confidence that the Federal Reserve will tighten policy and raise interest rates in December, which is contributing to the negative momentum in bonds. We're at a critical point with rates right now. We're in a battle with the 200-day moving average, the pink line in my chart. That 200-day moving average is a major market indicator, and here's why that's important. If you look at trends, when we fall below the line and stay below it for a couple of days, it becomes a ceiling and not a floor, and that could lead to higher rates for the immediate future, potentially for the next 1 to 3 months. So, should you lock or float? For my clients that are closing in the next 30 days, I'm recommending a lock position. I don't want to test the 200-day moving average at this point. All right, let's transition. Is it cheaper to buy or rent? The results from the latest rent versus buy from Trulia show that home ownership remains cheaper than renting in the 100 largest metro areas in the United States. The most updated numbers actually show that the range is an average of 37.7% less expensive nationwide. And if you're thinking about moving to Hawaii, well, it's only about 17.4% less expensive. So what about our hometown, the Dallas metro area? Is it cheaper to buy or rent? Well, the report is showing 47.4% less expensive to buy than rent. Here are 3 other interesting things I found in this report. Number 1, interest rates have remained low. And even though home prices have appreciated around the country, they haven't greatly outpaced rental appreciation. Number 2, home prices would have to appreciate by over 102% in the Dallas metro area to reach the tipping point of renting being less expensive than buying. And number 3, rates would have to reach 9.1%. That's a 145% increase over today's average of 3.7% for renting to be cheaper than buying. And according to Freddie Mac, rates haven't been that high since January of 1995. Bottom line, buying a home makes sense financially. If you're one of the many renters out there who would like to evaluate your ability to buy this year, download my ebook. This will give you 20 things to consider when buying a home. You can also visit me online or give me a call at the office. I'd love to help you with your home financing options. Your dream home may already be within your reach.